Good morning and welcome to the Quantum Leap Morning Leap session for Wednesday, February the 22nd, 17, I should say. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. This is a group of retail traders that get together each day in these live go-to sessions. First for the pre-market, and then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, quickly taking a look at the news. We had core retail sales and retail sales out of Canada at 8:30 this morning. They came in negative, pretty negative. 9 o'clock, we've got China CB leading index. We've got Belgian NBB business climate. But the big news would be at 10 o'clock and 2 o'clock, 10 o'clock being the existing home sales for the U.S., but this is a FOMC minutes released today, so we do have the minutes being released today, so that will create some late afternoon action. And then at 1 o'clock before the FOMC, which I find is kind of interesting, is you got Fed member Powell speaking. So he's going to speak before the minutes are released and likely to say something that will give a hint to what is in the minutes. So just be careful today on these two time frames, 1 o'clock, 10 o'clock, 1 o'clock, and 2 o'clock. These are all Eastern times as the market could revalue itself. Had a nice spike in the dollar this morning off of that Canadian news. I follow the pair. Let's take a look at what happened yesterday. Let me just expand this out. Yesterday, our over-under line was 23.51. I said that I do not want to be short above that. I'll be looking for only opportunities to get long, to go in and take out that Globex unequalized high. We had the previous high that was put in on Sunday in the Globex was up at 23.56.75. So we were looking for that to get taken out and break out outside of this holiday session. And we rallied all the way up, got up into the 64.75, put in a FUBAR Mr. Sneaky, got a nice rotation down off of that, 9-point rotation off of the all-time high in this classic setup that I always talk about. And then what do? We come down here, and then we get the Mr. Sneaky for a 5-point rotation up, go sideways as we balance out and accept price in around the 59 level. Try to break back down, but put in a higher low and rotate all the way back up and break the the all-time high by 1 tick. Got a failed auction right there on the 1 tick failed auction, and then we rotate back down, all the way back down into the mid and to the where the VPOC was most of the day, and then bounce, had a little bit of bounce in there. We closed at 59.75. F-shaped profile, double distribution. We've got a LVN right here at 60.50, but for the most part, I'll be watching this 52.75 again as my over-under line. And again, I don't want to be looking for shorts above that right now. We're currently trading 57. Take a look at the overnight action. Overnight inventory is somewhat neutral. It's actually net short right now, but it's neutral to net short. There's not a ton of net longs right now from the overnight session. We opened the overnight session at 59.75, basically chopped, tried to move up and continue the auction, only got to 63.75 overall, and then European Open had the sell-off. Again, another note, FUBAR, Mr. Sneaky, get a big rotation off of that all the way back down to the 56, the low volume area of this F-shaped profile, and then we sort of just been chopping around there, creating a double distribution in the Globex. And we've got a Globex LVN right here at 58.75. So we have a 58.75 and a 60 LVN that we've got to pay attention to on the RTH session. So let's just step back. I always like to just start my day taking a look at the macro and micro. I start with a monthly. I use a 9 EMA, 20 SMA, and what I'm doing is I'm looking at the different time frames and where we are within the trend. And trend is defined by good slope and separation, paralleling, moving up, and then where we're being challenged or violated. So we had a beautiful multi-year upward trend at the end of 15, beginning of 16. It's challenged. They take it back. We had a nice rising 3 pattern on the monthly that we talked about, which is a continuation pattern. And what do we get? We get the continuation. Now we've got slope and separation. We just put in a new all-time high yesterday at 23.65. We don't even start to challenge the trend until we get down to the 22.07 level on the monthly. So very strong on the monthly. Going to the weekly, same thing on the weekly. We get this strong, beautiful slope and separation. We've got continuation pattern happening here, and we don't even challenge that this trend until we get down to the 2300. Going to the daily, same thing, good slope, good separation, a little bit of consolidation, then and then the continuation. So far we've got an inside day going on the full session, but we don't even challenge the trend until we get down to the 23.38.20. So no, not likely we're going to challenge any of the trends on the daily. Going into the daily up to the monthly. Going to the intraday. On the intraday, okay, we did create the FUBAR in the RTH, and then the Mr. Sneaky last night in the Globex. And what do? We come back down, we close the technical gap that was created by the FUBAR Mr. Sneaky. We tried to break below the 9, but bounced right back. Watch this 23.57 area as a key area. If we go offer below 23.57, that could give us a bit of push down into the 23.51. I'm actually watching the midpoint of the gap, which is at 23.50.75. Going to the 1 hour, you can see that the 1 hour we have broken below the 9 and the 20. We've got the start of a possible downward trend. We've come up and we're coming up to test the 9 from below, so we could be seeing the start of a possible rotation down. Watch if we get back above that 23.58 1/4 for likely move up into the 59.75 area. Going to the 30-minute, you see that we get the same thing, although they're now trying to challenge the trend. We've got to close above the 9 right now. We're currently trading right on top of it at 57.50. We have a naked cross up here. Write this in your journal. Naked cross is at 23.60.75. If we can hold, if we can get above the 59.50, that's your target right there at the naked cross. So we're seeing a challenge to the downward trend, but if we break down, we could get continuation and acceleration to the downside. On the 15-minute, you can see that we have the same thing. We have a very strong downward trend. They come up, and now they're challenging the 20, but we're having trouble holding above it right now. So we could get a MA squeeze and a breakdown and continuation, or a bounce and a start of an upward trend. And then going to the 5-minute, you can see that we do have the start of an upward trend. We don't have a lot of slope right now. It's pretty parallel. We got the consolidation pattern happening here, but there is a possibility that we're getting back into a continuation up with the separation and possible slope. So really nothing in the intraday defines which way this market's going to go yet. We're seeing that the longer time frames is still working its way down, but in the intraday, but we're seeing some support coming in and some buying coming in down here in the 56 area. Taking a look at the big picture structure, you can see just to tell the put it in context, we are in this long consolidation and balance in around the 65. We break out, create the island top, create a microcomposite V-pocket 89, fall out of that balance, gap down, come down to the 65, pick the buyers up again, work our way up, accept the price at 22.75, and then we gap up again. What do? They accept value again right at that 89 level, and then we start our gap and go and our price discovery. Gap up, price discovery, gap up, price discovery, gap up. 2-day balance comes in right here at 23, and then we get the continuation. We've now had a 3-day balance zone in the RTH with the 2341 as the microcomposite. The value area high is at 46, and there's an LVN, a microcomposite LVN here at the 43 we want to pay attention to. But the holiday gaps up, and then we continue to hold that gap. We have a gap between, you can't really use the holiday, so we have a gap between the low of 52.75 and the high of 48.75, and that gives us a mid-gap fill at 50.75. And that's why I'm going to be paying attention to it and using the 52.75 as my over-under line. Okay, so let's take our overnight information and start moving it over to our RTH trading chart. So our overnight high is 63.75, which is just below the value area high. Our overnight low is 55.75. Basically right here at an LVN where we get the tail of this F shape. And then we've got this LVN right here at 58.75. That's one tick below the mid and the value area. So this is going to be a warning line right here. I always do that. I don't know why. Come on. Okay. And then our key line in the sand is going to be this 52.75, but I'm going to put it right on the VPOC, the naked VPOC at 52, because I really want to see them break through the 52 and push down into the mid gap and the naked close. And our daily ATR is running at 16.175 on the full session. So off of our overnight high, our daily downside ATR target is 23.4875, and we've got the naked close just below that at 47.50. And then we want to pay attention to that LVN, microcomposite LVN at 43. And then our key line in the sand, okay, which is the major support we need to hold, is down here at the 36.75. That's a composite LVN. But I'm looking for, if that breaks, then we don't have this key line in the sand anymore. Another mid gap, and then we have all these gaps that we've got to fill down below there, and I'd be looking for a bigger retrace, more likely back down to this area right here and around the 23, and start moving into some of these gaps and filling them. A lot of repair work we've got to do in the profile below that 36 all the way down to the 22.98 and a quarter. Our overnight VPOC is at 56 and a quarter. We actually could put in another overnight low. We have time to continue to break down and put a lower. We've been doing that a lot lately, either doing a make and break on the overnight low or overnight high as we come into the RTH session. Above, we want to pay attention to this LVN between the double distribution at 60.50. And of course, we want to pay attention to the value area high. But considering that the value area high is only 3 ticks off of the all-time high, I'm going to use the all-time high. And then our daily upside ATR target off of the current overnight low is up here at 71 and a quarter. And I'd be looking to stay long with any breaks above 65, because this could explode right up to 65. I want to look at the flex levels, see if we've got any targets up there. There's not much to guide us up in that area, so we've got to use fib extensions. We've got the value area high of the weekly range high, and that only takes us up to 66. So that I would be targeting, and then we don't really have anything. We can take a quick look on the daily to see if we have any fib extensions here. But with the gaps and the gap and goes, I don't think really creates anything. Well, you could take this right here, and you can go off of this fractal low here. Up here, come on, and then down here, and that gives us a target here of 79.10, 79.10, and 24.06. That's a pretty big target, so I'm not going to worry about that. But I'm going to put the 79.10. 79 and a quarter, I should say. 79 and a quarter. Don't need that. Okay, so that gives us all our levels. So we continue to one time frame up. We do not challenge the one time framing until we get below 52.75. So we're currently trading 57 in this double distribution. I do not want to be, I want to put another trade level in right here at the 54.75. Now, I know that the 54.75 is a holiday, but we could bounce off of that range high from Monday's holiday shortened session. So basically, above the 52s, I'm looking for continued longs into the 62 and a quarter, and basically I'm looking for an inside day today. We had a pretty big move, and I'm looking for us coming into the FOMC minutes, chopping between the HVNs of the double distribution. So, between the 59 and the 62, and just testing both sides of these distribution zones and defining the move above and below the 60.75. But most of my trades, unless there's some type of defined setup, is going to be to the long side as long as we hold above the 52, especially if we hold above the 59 area, the warning line. The warning line tells us if we get below, if we're failed to get back into the value and in between the double distribution HVNs, that we're likely to see a move down to the 52 area, and anything below the 52, then I'm looking for a bigger move down into the 40s and coming down somewhere down here. I'm not expecting a big day today. We need to balance out, so we're likely to get a inside day with a little bit of a downside bias if we break below the 54.50 and possibly a pop out and move down into the 40s. My main hypothesis is an open auction in range, a move up into testing the 60-50 chopping, and then moving up into the 62 and chopping, and testing both sides of this distribution. The alternative is if we fail to get back inside of value, come down and break below 52, then I'd be looking for a bigger day and a move down into the 47s, the upper 47s, and then failure and a push down into the 41. Again, I'm not doing the hypos. People don't understand that I'm not trying to hedge all the options. What I'm trying to do is see if then that. If this happens, then this is likely going to happen, and I'm going to do that. And I create a hypothesis or a trade plan for that. And I don't try to predict the market. I have 4 main hypotheses that I put together in order to have a plan already laid out. Then I can watch how the market is trading, who's taking control, and see which plan best fits the market and execute on that plan. I'm not just trying to give you all the scenarios so that I can say, hey, look, I'm right. That's not what we do. I do not try to predict the market. No one can. Even when we get it so right like we did yesterday. Yesterday in gold, taking a look at the gold, we talked about the fact that the key support on gold was going to be down at the 27. I said we either bounce off the 27 or we get further continuation to the lower side of the balance and down to this 23.40, and anything below 23.40 we'd be targeting the composite VPOC that goes all the way back to 2008 October. We came down, we got what was it? The low is 26.80, 2 ticks below that 27, and look at the bounce we got. We got this beautiful, there was a $13.20 point rotation, or $13.20 rotation up off of that, and continuation overnight up into testing the value area high up here at 41. We failed at the 41. We're coming back, and we're likely to chop today between these 2 distribution points. The microcomposite, the overall microcomposite that encompasses all of this action from February 6th till today, and the most traded price for that is 35. The last 5 days, including today, we're trying to accept value higher in around this 39 area. It was like that yesterday as well. If I take today out, you can see that yesterday was the 39 as well. So we're really, just chopping between these two microcomposite VPOCs and 2 key price acceptance. If we break back above 42.80, then you look for the continuation, and first target is going to be the 44.50 to get in and get funded, and look for continuation up to the other side of that balance and the breakout of this microcomposite range above the 46.60s up into the 48.30. Anything above 48.30, 12.50. 1250, 1251 is your target, and hitting that centennial mark as we continue to walk our way up towards the 1300 level. If we fail to hold the 34, then I'd be looking for getting stuck in this lower wick right here and spending most of the rest of the day chopping, working our way down towards that 28 and 27 level again, and basically getting stuck in this wick. But if we do see any failure off of the news, and we get below 23.40. Anything below 23.40, you got to be targeting that magnet here at the 12.1860. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side. Sorry it was a long one today. Got to cut these down. Okay, I'm going to go ahead and close the room down and open up the room for RTH trading.